What if I told you there's a type of money that works without banks, doesn't rely on governments, and runs 24/7, no bank hours, no middleman, no restrictions? Imagine sending value to anyone in the world instantly, securely, and without needing anyone's permission. That's what Bitcoin does. While the headlines focus on its price or volatility, very few people actually understand how it works behind the scenes. In this video, I'm going to break it down for you not with jargon or buzzwords, but in the simplest way possible. We're talking about the technology, the purpose, and the system that powers Bitcoin and why it's being called the most important invention in money since the internet. You've probably heard Bitcoin described as digital gold or the future of money, but what makes it so revolutionary? In this video, we're going to walk through exactly how Bitcoin works, from the blockchain that keeps it running, to the miners that secure it, to the private keys that give you full control of your funds. I'll explain what happens when you send a Bitcoin transaction, how new coins are created, and how the entire system stays honest without any central authority. Whether you're new to crypto or you've already bought Bitcoin but never really understood the mechanics, this video will give you a crystal clear understanding of what's actually happening under the hood and why it matters for your financial future. At the core of Bitcoin is something called the blockchain, which is basically a public digital ledger that keeps track of every transaction ever made. Think of it as a giant notebook that's duplicated across thousands of computers all over the world. Every time someone sends Bitcoin, the transaction details how much was sent and between which digital addresses are recorded in a new block. That block is then linked cryptographically to the previous one, creating a long, unbreakable chain of data. This is why it's called a blockchain. What makes it so powerful is that no one owns it, and no one can change it after the fact. Once a transaction is added, it's permanent and tamper-proof. This means there's no central authority to manipulate the records. The rules are enforced by code, and every honest participant on the network agrees on the same version of history. That's how Bitcoin creates trust without relying on any single person, company, or government. Now, let's talk about how transactions actually get added to the blockchain and how new Bitcoin comes into existence. This process is called mining, and it involves powerful computers competing to solve complex mathematical puzzles. This system, known as proof of work, ensures that adding a block requires a significant amount of effort. When a miner successfully solves the puzzle, they get to add the new block of transactions to the blockchain and are rewarded with newly created Bitcoin plus transaction fees. This reward currently sits at 3.1 to 5 Bitcoin and gets cut in half approximately every 4 years in an event known as the Bitcoin halving. This built-in scarcity is what makes Bitcoin so valuable. It has a hard cap of 21 million coins. But mining isn't just about rewards. It's also what secures the entire network. The amount of computing power needed to attack or alter the blockchain is so massive that it becomes practically impossible. So, every time you send or receive Bitcoin, it's the miners who are doing the work behind the scenes to verify your transaction and lock it into the blockchain forever. When people say you own Bitcoin, what they actually mean is that you control a private key. A private key is a long, randomly generated number that functions as a secret password, and it is the only way to access and spend your Bitcoin. Every private key is mathematically linked to a public key, which is then converted into your Bitcoin address, similar to an email address but for digital money. When someone sends you Bitcoin, it goes to your public address. To spend it, you must digitally sign the transaction using your private key. This signature proves that you own the funds without exposing the private key itself. The system uses cryptographic validation to confirm that your transaction is legitimate. If you own the key, you control the coins. But if you lose the key, the Bitcoin is gone forever. It gives you complete control, but also puts the responsibility entirely on you. Many people think a Bitcoin wallet stores the Bitcoin itself, but that is not actually the case. A wallet stores your private keys, which give you access to your Bitcoin that is recorded on the blockchain. There are several types of wallets. Hot wallets, such as mobile apps and browser extensions, are connected to the internet and are great for fast and easy access. However, they are more exposed to online threats. Cold wallets, like hardware wallets or paper wallets, are kept offline and are ideal for long-term and secure storage. Think of your wallet as a keychain and the blockchain as a vault. When you send Bitcoin, your wallet communicates with the blockchain and provides your digital signature to move funds from your address to someone else's. Wallets simplify the process, but behind the scenes it is all powered by cryptography and network consensus. Knowing how wallets work is just as essential as knowing how to keep your email account secure. When you hit send in your Bitcoin wallet, it creates a transaction file that includes the amount, your sending address, and the recipient's address. Then, it digitally signs that file using your private key. This signed transaction is sent to the Bitcoin network, where thousands of nodes check to make sure it is valid and that you have the required balance. Once approved, the transaction goes into a mempool, which is like a public waiting room. Miners select transactions from this pool and add them into the block they are currently working on. If you include a higher network fee, your transaction will likely be prioritized and processed faster. Once a miner successfully creates a block that includes your transaction, it is recorded permanently in the blockchain. After that, the recipient's wallet reflects the payment, and with each additional block that is added, the transaction becomes more secure through confirmations. The entire process usually takes a few minutes, and it happens without any central authority, bank, or permission. One of the most powerful features of Bitcoin is that it is decentralized, which means it does not rely on any single point of control. There is no CEO of Bitcoin, no company behind it, and no central server that can be shut down. Instead, Bitcoin is run by a global network of independent nodes and miners, all following the same protocol. Anyone with an internet connection can download the Bitcoin software, run a node, and verify every transaction themselves. This is what makes Bitcoin so resilient and censorship-resistant. If a government were to try and ban Bitcoin, they would have to shut down tens of thousands of machines across dozens of countries at the same time, which is practically impossible. Because of this open and distributed architecture, Bitcoin has remained operational for over a decade, even through regulatory crackdowns, market crashes, and coordinated attacks. Its survival is not based on trust in any one party. It is based on mathematics, transparency, and distributed consensus. Bitcoin's mining process has received a lot of criticism due to its high energy consumption, and this is a conversation worth unpacking. Mining requires specialized computers that consume large amounts of electricity to perform complex calculations, which is what keeps the network secure. Critics argue that this is wasteful and environmentally harmful. However, supporters point out that Bitcoin's energy use is intentional and necessary, as it creates a cost for validating transactions and prevents spam or malicious attacks. Unlike traditional finance systems, which rely on trusted intermediaries and physical infrastructure, Bitcoin secures its system using pure computation. Also, a growing portion of Bitcoin mining is powered by renewable energy sources, especially in regions with excess hydro, wind, or geothermal power. Some experts even argue that Bitcoin could eventually help stabilize energy grids by using surplus power that would otherwise go to waste. While it is true that Bitcoin uses energy, it does so to maintain network integrity, financial independence, and global neutrality. Whether that trade-off is worth it depends on how much you value a truly decentralized monetary system. Many people think of Bitcoin only as an investment, something you buy and hold while hoping the price goes up. But Bitcoin is also being used in the real world today, especially in places where financial systems are broken or unreliable. In countries facing hyperinflation or authoritarian regimes, Bitcoin allows people to store value, escape capital controls, and send money across borders without interference. For those who are unbanked or underbanked, Bitcoin offers access to a global financial network without needing to open a bank account or fill out paperwork. It is also being used for remittances, allowing workers abroad to send money home quickly and cheaply. Even charities and activists use Bitcoin to receive donations when other payment systems are censored. These are not future dreams. They are current realities happening across Africa, Latin America, and parts of Eastern Europe. Bitcoin is proving itself not just as a digital asset, but as a lifeline and alternative for millions of people who have been excluded from the traditional financial system. Whether you are excited, skeptical, or still unsure about Bitcoin, one thing is clear. The way we interact with money is changing fast. Bitcoin is not perfect, but it represents a bold attempt to create a neutral, borderless, and programmable form of money that anyone can use. As more institutions, developers, and everyday users begin to build around it, Bitcoin could evolve from a niche experiment into a key part of our financial infrastructure. It could serve as a reserve asset, a global settlement layer, or simply as digital property protected by math and code. The most important thing is not whether Bitcoin replaces fiat currency, but whether it gives people a choice. A choice to opt out of systems that feel rigged or broken and into a system that is transparent, open, and predictable. Understanding how it works is the first step to seeing its full potential. And if history is any guide, those who learn early are often the ones who benefit the most. If this video helped you understand how Bitcoin works, do not forget to like, subscribe, and share it with someone who still thinks it is just fake internet money. Let me know in the comments what you found most surprising or helpful, and if you want me to cover wallets, security tips, or how to actually buy your first Bitcoin. The future of money is being written right now, and the best part is that you get to be a part of it.